Supermicro stock is up 71% this year and 9% in the last 52 weeks. Not bad for a company that most retail investors still overlook. But here's the question: can SMCI keep climbing, or is this where the growth story stalls out? Supermicro builds the hardware that powers the entire AI boom: racks, servers, and the systems that are running NVIDIA's latest Blackwell chips. And while most people are chasing the chip makers themselves, Supermicro is selling the shovels in the AI gold rush. They just rolled out the industry's first one-stop shop for data centers, cutting costs and time to online for clients while boosting performance. And that's huge, but it comes at a cost. The revenue surged 46.6% to 21.97 billion, yet margins, they slipped from 13.8% to 11.1%. Profits dipped down slightly from last year, and that's where I start paying attention. Because if you've followed me long enough, you know that I care less about hype and more about how fast a company can grow without burning its profits to the ground. And right now, Supermicro's chasing market share like a race car running hot: high speed, high risk. And then there's the one signal I think investors are missing. Average selling prices jumped 34%, which means the market still wants premium Supermicro gear even at scale. If that trend can hold, the stock could have a ton more runway. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/RickO to get your 10 stock picks right now. Hey, what's up, everyone? My name is Rick Orford. I've been trading since 1999, and I am not a financial advisor. It's a good thing. I'm not here to sell you something you don't want. I break down the numbers so retail investors like us can make smarter, more confident decisions with our money. In this video, I'm going to show you why Supermicro's fundamentals might be the best under the radar play in AI and the one risk that could kill the story overnight. Let's get into it. Supermicro Computer builds the hardware behind today's AI growth, as well as design solutions that bring teams from blueprint to deployment quickly. At the core is what they call data center building block solutions. This is a mix and match method that lets users tailor whole racks for data centers and other high performance computing uses. In other words, with Supermicro, you're not just buying parts. You build your dream AI engine one block at a time. Supermicro offers turnkey GPU platforms powered with AI infrastructure and pre-integrated AI superclusters, including systems that use NVIDIA's latest Blackwell chips. So if NVIDIA makes the chips, Supermicro builds the machines that make those chips matter. Beyond servers, Supermicro delivers complete racks so enterprises can compete with the big AI players without the financial stress of integration. A highlight is the GB200 NVL71 rack, which pairs a Grace CPU with a Blackwell GPU, all in a 48U liquid-cooled package. With a network of cloud providers, enterprises, and research labs, Supermicro is built for speed. And they're not just selling hardware, they're selling acceleration. They just made the industry's first one-stop shop for data centers, ultimately reducing costs and time to online while raising performance. So Supermicro isn't just following the AI wave, it's building the surfboard that everyone wants to ride. All right, so let's take a look at how the stock is performing, because the stock is probably why you're here, right? Supermicro currently trades at around $52. It's up 71% year to date and 9% in the last 52 weeks. With a 60-month beta of 1.55, the stock tends to move about 1.5 times the market average, but it isn't as volatile as, some of today's other growth stocks. That means it moves fast, but not recklessly. The market does respect its momentum, and I think the question is, can SMCI keep climbing, or are we just hitting some turbulence? Well, to answer that, let's have a look at the mechanism that's powering the engine. It's something that we talk about a lot on my Discord channel. Supermicro is ripping revenue higher as the company captures outsized demand for GPU racks and full systems, with net sales up 46.6% to $21.97 billion. Their biggest market is the States, bringing in $13.05 billion, but other global markets shouldn't be ignored either. In Asia, the market grew 88.6%, and in Europe, it more than doubled, 110.7%. And that proves that Supermicro is more macro than you think. Now, when a company doubles growth overseas and still dominates at home, that's not luck, that's execution. And that surge isn't just more boxes out the door, because average selling prices, they climbed around 34%. The trade-off, though, is margin optics, because gross profit grew to $2.43 billion, but the gross margin compressed to 11.1% from 13.8% due to their price positioning strategy to win more market share. And what does that mean? Well, they're slashing per unit profit right now to own the market in the future. It's a classic land grab mode, right? Profits are still good, but they took a little hit. Supermicro generated about $1 billion this year in net income, which is a little less than the $1.15 billion they brought in last year. So you can see how lower margins affect earnings even when business is booming. So yeah, sales up, profits down just a tiny bit, but momentum is everything in a growth cycle like this. Now, Supermicro's next earnings call is scheduled for November 3rd. So right now, I think investors are paying for hypergrowth and positioning to capture increasing global demand, higher value racks, and expansion wins. Translation: people aren't buying what SMCI is doing today. They're buying what they might be doing tomorrow. And by the way, when SMCI releases their earnings, I will do a complete deep dive on it, so be sure to watch out for it. Because if those numbers beat expectations, I think the story on SMCI can move fast. But does the word on the street reflect the success of Supermicro's growth story? Well, a group of 19 analysts have a consensus hold rating with a high target price of $60. So Wall Street is basically saying, nice work, but prove it. You're paying to see a growth story here with an interesting plot. Their demand is global, and they're distributing NVIDIA Blackwell Ultra systems at an impressive scale. Faster installs, bigger builds, bigger invoices. And that's how you grow into a valuation. And that's how Supermicro turns market hype into real hardware dominance. Now, I still want stronger margins, but the runway is long and the partners are serious. But what about you? Do you believe in what Supermicro is doing? Are you buying or selling or watching from the sidelines? Let me know in the comments below. And while you're there, if you found this video helpful, do like and subscribe. It'll help others find the video. It supports the channel. And of course, you won't miss out on any of my future deep dives. Well, folks, that's it for me today in this video. I wanted to thank you so much for watching, and I'll see you next time.